Please give a warm welcome to the CEO and founder of Square, Jack Dorsey. And again, Squawk Alley co-host from CNBC, Kayla Tausche.
Thank you to Jack Dorsey for coming here and having a conversation about payments and your role in the payments industry. I've had the opportunity to have multiple conversations with you over the years in your role as a CEO and a public figure, but you are the visionary for Main Street and Main Street business. Where is Main Street right now in terms of adapting new forms of payment and sort of coming up with the times?
Well, thank you for the time, and thanks for having me and to represent Square and our work. I think it's a really exciting time. Like small businesses are one of the greatest parts of any economy, and certainly the U.S. economy. And when we first started the company, we realized an opportunity to bring to really meet people where they were. And the reason we started the company is because my co-founder Jim McKelvey wasn't able to accept a credit card, yet he had this iPhone, this supercomputer in his pocket, and it seemed so trivial to be able to accept this device that more and more buyers wanted to use, but it was extremely complicated. And it wasn't just a software solution, it wasn't just a hardware solution. It was looking cohesively at the entire industry and how to simplify it such that more and more people could access it, right? So we started really small, and we made a reader and plugged it in the headphone jack, and we built the right software, and then we realized it wasn't just about that. It was also identifying people coming in, building a better understanding of who they are and what their ambition is, and then building off of that. And I think when we talk to merchants in St. Louis, where we're from, and San Francisco, and anywhere around the world, they hear this word technology, and it just is it's such an unapproachable concept. And we have to realize that this has to be seen as a tool, and it has to be seen as a tool that helps them progress in whatever their ambition is. And for a lot of small businesses, and obviously even larger businesses, it comes down to a very simple model, which is I need this tool to help me grow. And for us, if we're building that tool, then we grow as a business. And if we grow as a business, then we can help more merchants grow as well. And I love the simplicity of that model for us. The market has really shown an appetite for it. So the more we simplify, the more we make these tools cohesive, intuitive, fast. Speed is a huge element. But most importantly, going to where our customers or merchants are, and the devices they want to use, whether it be mobile or desktop, it doesn't matter. What matters is that we work with how they work. And that means that we're giving them time back. That means we're saving them time so they can focus on their business and their customers, which ultimately will grow their business and grow our business.
How creative have you had to be in recent memory to get those tools in their hands, especially with the transition to EMV and then the transition to contactless with the removal of the Apple headphone jack? What do you need to do to get those new devices into merchants' hands?
I think the most important thing is trying to put yourself in your customer's shoes, have a lot of empathy for what they're trying to do. And our customers are paying us to make decisions around what tools to put out there, and more broadly how technology and the industry is evolving. And a big shift that happened in this country in the last year was towards EMV. And we really like that shift because we're moving towards authenticated payments. Bringing more security to every payment means that we have the potential for less fraud, and that means lower cost ultimately. So we like that. The experience around EMV, at least what we've seen from feedback in this country, is one of I guess hate.
To put it lightly.
People aren't really happy with it, and they're not happy with it because it's not because you're making them think about, well, this is more secure. It's really, really, really slow. And just spending time behind the counter and waiting for a transaction to complete, suddenly you're in this mindset of having to think about a transaction and about payments instead of what you're buying. And the more we can speed it up, and I think we've done a great job at getting an industry average EMV transaction time that hovers around 10 seconds, which is a long time, just count out 10 seconds, down to under 5, and our goal is to get it to 3 seconds. So that's great. We're going to push really hard in the confines of technology to do that, but also we believe a much better experience is contactless, and it's really because of speed. So we've been putting a lot of effort in our contactless reader that also accepts EMV, but highlight the contactless side, making sure that we're the best, most perfect implementation of Apple Pay and Android Pay. But we would love it if we could, as an industry, move people towards these faster payment devices like NFC by issuing more NFC cards and putting more emphasis into Apple Pay and Android Pay, which ultimately will result in more sales for our customers because they can see more customers. It's a faster transaction time, so they can actually see more people. And that's what truly matters, is helping these sellers see more customers and removing a lot of the frustration and the friction away from the transaction. And we believe it's all about speed. So our creativity really starts with how do we make it faster? And how do we make sure that we're guarding our sellers against technology shifts? The headphone jack is a good example. We saw this last year that it could happen. It's a potential. And there's a lot of black magic that we have to do just to kind of get this reader into a headphone jack. It wasn't designed to do that, obviously, but the Bluetooth standard was designed to pass data. It was designed to allow more flexibility and freedom for both the buyer and the seller. So we generally like that direction anyway. It just took a little bit of time to get there and to really understand what it was and how it would manifest.
You're becoming an increasingly global company, and the standards for payments and the timing at which a lot of other countries adjusted to EMV is well in advance of when the US came on board. So as an executive and as someone who's trying to figure out where the market's going from here, how do you manage the different standards of payments in the different countries that you want to expand to?
Well, I mean, so we have to take a market-by-market approach. So every market is going to have a slightly different answer about their own regulatory environment and how they're protecting and supporting citizens and sellers through commerce and through that regulatory body. We've always taken on a role of making sure that we're pushing on those rules to make sure they're truly serving customers. And the reason why is because we want to make sure that we can see more people. The way we did that in the United States is traditionally the way that sellers would get a merchant account in the United States is by going to a bank or to an ISO and going through a credit check process. And a lot of entrepreneurs who are just getting started, they don't have the best credit. So they wouldn't pass through and they wouldn't be able to accept credit cards. And suddenly, they weren't able to participate in the economy in the same way that other sellers were able to. So we re-looked at how people came on to the network, and we built a new system to vet identity. And that allowed us to get to 96% acceptance rates of people who wanted to accept credit cards. So we just took on a different mindset of trying to include as many people as possible and then building risk systems to watch as closely as possible when something is against the rules or the regulation. We ask those people to leave. And the same is true for how folks think about EMV and software around the world. EMV has been in use for 10 years before the United States. It's usually combined with PIN. We took a pretty, stubborn point of view in terms of we wanted PIN entry to be software. And we, again, we're meeting the customer where they are, and they're mobile. So they're on these mobile devices. So we wanted mobile PIN entry, and we wanted to make that secure. And the reason we wanted it to be software is, software we can update instantly. If there's an issue, we can get an update out automatically to our sellers instantly. We believe software can be made much more secure than hardware, and it reduces the cost. Software is much more efficient and cheaper to develop than it is hardware. So we took that stance, and we spent a few years really helping to educate why this is a more secure solution and something that the industry should adopt. And we used Australia as a pilot, and we succeeded in that goal. I think it's on all of us to make sure that we're using the most modern, relevant technologies to really meet what customers need. And to us, that's a big part of that is security and, again, speed and then cohesion. Being on a device they're already familiar with, they're already on, they're using hundreds of times a day, they're putting in a PIN hundreds of times a day, so they're familiar with doing this on a touchscreen. So just recognizing that and bringing it to more people.
Does the buck stop with the mobile device? Because we went from cash to plastic to your phone with a chip stop in between. What comes after the phone? Do you spend time thinking about that?
Yeah, I mean, I don't think it's about the mobile phone or the phone in general or any particular device or configuration. It's again that concept of meeting people where they are. And I think one of the most amazing things this concept of the cloud has given us is that it doesn't matter where you are. It's everywhere. And I think that's one of the most important technologies to come out of the blockchain is this. Cloud computing is effectively just our ability now to coordinate thousands of machines together in real time. And the blockchain is the ability to coordinate a distributed ledger. And the power of both cloud computing and the blockchain is that you have built-in resilience and redundancy. And with that distributed ledger, you potentially have an ability to have a currency that can flow anywhere and can be ever present, no matter what device, whether it's mobile or stationary, or something that we don't imagine today. It's always going to be present, and it's always going to be with you. And I think that's the most important thing to consider, is how are we enabling more of that flexibility, both for the seller and for the buyer, and building into that trend, because obviously that's where it's going. It's giving people more freedom, and that freedom gives them more time back to focus on what's most meaningful.
7 years ago when Square founded, it was a simple hardware company. Now you issue loans, you help companies with their marketing, you give them data and analytics in addition to the hardware. What other products could we see from Square? Will there be a blockchain offering? Will we see a piece of plastic bearing Square's logo? Where do you think in 5 years we'll see Square that we don't now?
It kind of goes back to the simplicity of our model, which is our goal is to make sure that we're helping our sellers grow. And if they grow, we grow. And if we grow, we can help more sellers. As we've evolved over time, we've added to our definition, not just sellers, but also individuals. That's why we're doing Square Cash. We think we have an opportunity to bring the same accessibility that we did with Square and to merchants, to individuals as well. And we started with peer-to-peer, which we're really excited about, and it's something that I think is one of the cleanest, simplest, and fastest ways to send money and receive money. And we think there's a lot of room there to help people grow. And you think about the role of a bank. People go to a bank, they go to a financial service to help them fulfill a dream or a desire they have, right? Whether it's a merchant who wants to accept credit cards because they want to they want to give a convenience to their buyers and they want to make every sale, or an individual who wants to do something personally or maybe even get into business. So, I think as we look back, we we saved a trip to the bank with the merchant acquiring account. You just had to download an app and you were in business. And it's not replacing the bank. It's just making it more accessible. You know, we partner heavily with our banks and with our networks, but we believed we could do a really good job in making that more accessible through modern technologies and really a different understanding of what people wanted. So it goes back to, we're going to build everything that we can imagine to help people make the sale and then make more sales and then ultimately grow as either merchants or individuals.
It was almost a year ago that Square went public. Besides Twilio, you were the only unicorn company that has gone public since then. And I asked you at the time if you felt like you were taking one for the team, and you said no, that you were just doing what you needed to do for your company at your time. But for the 11,000 entrepreneurs that are in this room, that at some point will be facing that decision, whether to go public, what have you learned in the last year?
I think, well, first I'm very proud of the company. I think we've done a really good job at transitioning from private to a public stage, and it's really hard. And I think we've been very mature about it. I think we've kept our core and our soul and who we are and our values. And I also think we've kept our sense of thinking about the longer term and really building a company that endures. So I guess that's my feedback is making sure that, as we look for new vehicles to continue to grow the company, which going public is just another vehicle. It's an investment vehicle to allow us to move faster and to go broader, that we maintain what's truly important and why we're here and what our purpose is. And losing sight of that or making going public a goal, I think is the wrong approach. I think going public is to be seen as an enabler to help you go faster and to help you serve more people. And that was just validated every month after going public. Sure, it's hard and you get more scrutiny and you have to, at least in the United States, you have to report every 3 months about how you're doing. But that also has the potential to give you a greater discipline, as long as you can connect those dots in terms of the long-term view and really where you came from.
We were just having a conversation a few minutes ago about your expansion, and you're talking about global financial regulations and rules in Australia and what products would work there. Is it hard to take off your in-depth payments hat and put on a social media hat when you have to? Is it easy to toggle between the two topics?
Well, I think commerce, trading, money, selling goods and services is foundational, and I think it's as foundational as communication. And I think they, we've complicated them, and I think our goal is to make it a whole lot easier, and that's what we're focused on. So I don't really consider a shift. I want to work on things that people interact with every single day, and that empower them in particular ways. And finance and commerce is one such. Communication is another such. So that's not a big context shift.
Well, Elon Musk solved the problem by just deciding to merge his two companies. Would there ever be synergies between Square and Twitter?
The companies have worked together, so yes, we have had partnerships.
For the developers in the room and the people who are building technologies both on the front end and the back end, when you think about what Square needs to grow, to enable more sales going forward, what can banks, what can issuers, what can networks, what can the small startups and the entrepreneurs in this room do to make your product better? Well,
first, I mean, we have to meet you first. I mean, we have to meet you with a great platform and a great API, so that you can utilize our services more. I would turn that a little bit in terms of like what can the industry as a whole do together. You know, I think one of the challenges we had in starting was just a sense of being really closed off to new ideas, and I think, you know, we need to have an approach where we're a whole lot more open to new ideas, and also that we are fully cognizant of the risks, and we make the appropriate trade-offs. And if we do that, we better everything. If we can't do that and we just close the door immediately, we're not going to get anywhere. And I think, you know, all of the entrepreneurs in this room, all the developers in this room, they're looking for partners to do some really amazing things. And they come with fresh perspective and fresh direction, and you know, I think our role is to help guide based on the experience that we have and what we've learned, but also to be open to evolving as quickly as possible. Because if we don't do that, you know, we're not, by definition, we're not serving the customer to their greatest need. So that's what I would encourage is just more openness and more collaboration around really understanding the risks and having an open conversation about it, and then understanding the trade-offs there.
Well, I know that's a message that resonates with so many people in this room. Jack Dorsey, it is always such a pleasure to get to talk to you, so thank you for your time today.
Thank you all.